Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo on both the podcast and on the video podcast to talk about stocks that are on sale and basically how low can they go. I decided to take a look at some that were not looking too good so that we can kind of see, is there further downside? Should I be diving into some of these? What's going on with some of these stocks that are on sale? Now, I just took a week off here at Zacks. I went on a vacation, and normally I don't pay that much attention to the stock market because it's always good to have a break, right? So that was my break, but I can't resist tuning in and checking out what's going on. And sure enough, it was kind of a rocky week, and some of the stocks I've been tracking throughout basically the pandemic. I have like a tracker set up on a lot of those pandemic type of stocks, and a lot of them just kept sliding. And I was like, how low can this go? So that's why I wanted to do this podcast this week. And I wanted to do it on the video podcast so that I could show some charts about what I'm talking about on the earnings estimates for some of these stocks and just where the stock is like visually. So you can tune in if you're listening to this on Apple Podcast. I'm going to try to describe the chart as best I can as well, but you can tune in on the video portion of it on Zacks.com/YouTube. That'll take you to our YouTube channel, or just put in Zacks Investment Research or on YouTube, and you'll find our channel there. And all the Zacks Market Edge podcasts are there in the video format. I know you're going to have to stare at my face for some of this here, and that's why I don't like doing the videos with just me, but it's not too terrible. I did think about whether or not I should turn on my ring light here, which I normally use on all the videos on these, but my walls are so dark, as you can see behind me. I always have these dark blue walls, which I love, but they're not so great for video podcasting or just videos in general. So I'm keeping my ring light on today. But let's turn back to stocks. Okay, so I have covered in recent weeks some of the stocks that weren't doing so great on both this podcast and the Value Investor podcast, because we have seen some of these big names sell off, like Disney, Walgreens. Those are two in particular I've covered kind of quite a bit recently because they just were at multi-year lows. So I'm not going to cover those two on this podcast because there's others that are just as intriguing that we haven't talked about that you might want to take a look at. So let's just start off by diving in. Now, I didn't do any kind of screen for this podcast, but you could on Zacks.com, you could screen for stocks trading within 5% or maybe 10% of their 52-week lows. That would get you a lot of stocks on sale, right? If they're back there to the 52-week lows. Because remember, a year ago in October 2022 is when the stock market bottomed. So if we're looking at that 52-week low, and we really don't want to be back there, right? We don't want to be back at last October because it bottomed and then it rallied. So something bad is going on if we're back there again. And with some of these, they somewhat are back there. So again, I didn't do a screen. I just kind of know these stocks and I've been following them, and I've been like shocked at how weak they've been, especially at a time when the overall indexes are not that weak, and the Magnificent Seven is kind of holding on to most of its gains. So what is going on? Why are these other ones on sale? Can I get them even cheaper? Or maybe this is it and they're starting to bottom. So again, let's just dive right into a couple names and we'll see what the charts show. So the first one I want to talk about is a cyclical commodity stock, Albemarle, ticker ALB. is the ticker. Now I'm showing the screen right now. This is the 5-year price and consensus screen. So this is going to show us what the stock has done over the last 5 years, as well as what the earnings estimates are looking like. And this is the consensus estimate. And it goes back the 5 years to 2021. And you can see for Albemarle, because this is lithium, that's what they mine. That's what they produce is lithium that goes in the electric vehicle batteries, plus many other types of batteries in your phone, in your cameras, a lot of electronics. But it's really seen a boom, the lithium prices, because of the surge in electric vehicles, and those batteries are needed. So supply and demand dynamics, too much demand, not enough supply. The price of lithium soared last year, but this year it's come down. So it soared. The producers like Albemarle produced more because they were able to increase production. That capacity increase meant there's more lithium out there. So the price comes down. Similar kind of dynamics to oil, but there's no OPEC, not yet, for lithium, although that has been talked about, that several of the big producers might want to band together to control the pricing, but we haven't actually seen that yet. And so it wouldn't be the companies doing it, it would be like the countries banding together, like Chile and Australia and a couple of the other big producers. But Albemarle is one of the bigger producers. And you can see on this chart, the shares have really come down this year. They're not back to like pre-pandemic levels by any means, but this year they're down 21.7%. And the 2-year stack, they're basically back 2 years ago, down 25.9% in the 2-year now. So that's why I've been watching this one and I'm like, wow, it just keeps sinking here, but it is going to move on the lithium pricing. So you can see with those earnings consensus, they have come down off of earlier this year when lithium prices were higher for both 2024 and 2025. But now that we're heading closer to 2024, things are, analysts are not as bearish and the estimates have started to rise again. So this one really will turn on the price of the lithium, like the oil energy stocks. So it's really hard to just look at the consensus and be like, wow, this is cheap. But on a PE basis, it is cheap. And the analysts have much higher price targets than what this is at. So it's trading a little over $150, as you can see on the chart. And the analysts are, up closer to 300, which is where it was in 2022. So it is going to move with the price. If lithium starts heading back up, so will Albemarle shares. But this looks pretty cheap here. And I might be interested in some of these lithium producers here at this much lower level. And no way to know if this is the bottom or not. Going to kind of have to see what happens with the price and what happens with the earnings report and what the company is seeing. So that's Albemarle, ALB. Another one I wanted to look at, Zoom Video. Remember them? Yeah, it got crushed last year on the big sell-off of all the pandemic winners. But look at this chart. So Zoom over the last 2 years down 73.4% and is basically round tripped back to the pre-pandemic levels. But over the last or year to date, it's not been that bad. It basically sank down there last year and then hasn't really done much this year. It's down, but only 5.5%. So it's basically kind of treading water. But why I'm bringing up Zoom, ticker ZM, by the way, Z as in zoo, M as in Mary, is because look at those, earnings consensus like that. Those aren't on the decline here, and they're way up there. They're actually looking kind of good here. So the analysts don't look super bearish, but you can see 2024, 2025, those are very narrow and almost like the lines are almost right on top of each other, which means the analysts aren't seeing much growth there. They're not seeing a huge decline, but they're not seeing much growth. So what are you paying for the stock? That's what you have to ask on a PE basis. What are you paying for these earnings if you don't get much earnings growth? You better get it cheap on a PE basis if you're not getting much growth on the earnings side. But still a little early to know what's going to be happening in 2025. So this one is a little intriguing to me here, but this is probably why the stock is treading water, not really doing much this year because those earnings are kind of just sitting there as well, not doing much either. So that's Zoom Video, ticker ZM. Then I wanted to look at a company very little followed, but I've been following it for several years now, Farfetch Limited. Farfetch, ticker F as in Frank, T as in Tom, C as in Charles, H as in Harry. Okay, I'm putting up the chart on this one. Farfetch is kind of in retail, but it's really kind of tech. So it is a marketplace, a website that deals with luxury goods. And one of its big markets is China. So a lot of the retailers will sell on Farfetch. So it's really a marketplace type of scenario. You'd think that would be good. And it was good during the pandemic. We're all ordering stuff online. So similar to like Etsy, Amazon itself, its actual website, that's the marketplace. We were all on it, but it's been, just a big decline in the share price since 2021. And Farfetched year to date, it's still declining, down 61.7%. 2 years now, down 85.7. It is at new lows here, and it's just barely above $1, I think. Yeah, $1.82 is where it's at right now when I'm recording this on October 17th, 2023. So basically the street has given up on this one, but look at the earnings. So these are kind of just sitting there as well, kind of like we saw with Zoom, not a ton of growth. You can see 2023, 2024 kind of just right on top of each other now. So not a lot of growth there. And then 2025, they are a little more bullish, the analysts. There is a little bit of growth in the earnings expected there. But clearly the street is pretty negative. Now I'm going to leave the chart. I'm going to look at the detailed estimates that are on Zacks.com just to get a better look. It is a Zacks number 4 sell as I'm scrolling down. So earnings negative for this year, expect to be negative for next year. I'm not a big fan of that. You got some revenue growth though. So 2.5 billion in revenue expected for this year. That's expected to be up almost 8%. And then another 25% growth to 3.1 billion for next year, but still not able to be profitable. So I'm not a big fan of that on Farfetch, but I have been following this one. So just wondering how low can it go? That's the whole point of this podcast. It keeps going lower. So I'm not all that inclined to dive in on a company that has still the negative earnings and does have revenue growth, but with the dynamic right now with the consumer in basically global, but certainly in China, it's a little dubious for me here with Farfetched. But you might want to take a look at it, and the ticker FTCH. Okay, another one I wanted to look at. This one has been in the news, and it's a big cap this time because Farfetched is a small size company, is JD.com. Actual website, again, in China, retail, the Amazon of China. And this is an interesting chart, right? It's surprising to me how far this stock has come down off its 2021 highs. Over the last 2 years, it's down 67%. Year to date, it's down 52.6%. And this is on the worries about the Chinese consumer. And it's justified, apparently, because they have pulled back on the spending there. But these shares are basically round trip to the pre-pandemic. I want to say, just looking at this chart, no, they're below pre-pandemic. You got to go all the way back to 2019 to see this level on the shares. And so how much lower can they go? Well, you can always go lower, right? But take a look at those earnings. So the analysts are not super bearish here, but you can see 24s and 25s on a bit of a decline there. So recently, the last couple of months, the analysts have been like, meh, we don't think it's going to be so great next year in 2024. So we're cutting. So that's what they've done. And it's brought those earnings estimates down, but still see some earnings estimates growth there that doesn't look too shabby. So I'm going to go over and look at the detailed estimates on this one too. And we see 2023 revenue expected to be down 3.2% this year, but rebounding a little bit next year, up 7.4. Then looking at the estimates, expected to be up 7.8%, as that's what the chart is looking like, because those lines were above each other, and then another 8% for next year. So that's not terrible. It's going in the right direction with some more earnings growth. We don't have any estimate changes in the last 60 days. And, these estimates are just kind of hanging out there now that they've come down a bit in the last 90 days. You can see it was 288 looking for 277. So the analysts have adjusted here, but not terrible. Is it cheap? Yeah, it's trading at about 10 times PE of 9.98. So how much lower can this go? Well, we've seen it round trip all the way back to 2019, but on the worries about the Chinese economy, that's not something that a lot of investors want to be involved in. That's where you do get some values in these stocks because everybody just gets way too bearish. But is 10 times cheap enough on the PE basis? You'd probably want to go check out what's happening with price to sales and, maybe even price to book on this one. But JD.com looking kind of interesting here on this continued slide that we see in these shares. So that's JD as the ticker with JD.com. Then I'm going to return back to the United States and PayPal. I have talked about this one on other podcasts, but I can't get it out of my mind because look at this chart, even more dramatic. Okay, so we've had the big sell-off. It started at the end of 2021 with a lot of the fintech stocks and the tech stocks. PayPal is on the fintech side. Had a big booms during the pandemic because we were all using fintech. We all needed ways to pay for things without going anywhere in person. So PayPal, big boom, new all-time highs, and now the bust. What has the shares done? So year to date, down 19.9. So it's still sliding. This is one of the ones that has not really rebounded here in 2023. Over the last 2 years now, down 79%. And it has definitely round tripped well below 2020's lows on the pandemic and seemingly is still declining because it's now still hitting 52-week lows. But what about this earnings that is displayed on this price and consensus chart? You can see 2022, the earnings did fall off a cliff there. They came way down as business fell, obviously. And then 2023, they started off kind of more ambitious, but they've fallen, but kind of just static now, not going down, not going up. They're holding at this level. Then 2024, again, the analysts started off too bullish last year when they were thinking about 2024. And those have come way down, but again, kind of just static here in 2023. No big movements up or down. And now 2025, we're getting estimates in for that year. And that too is static. It's not going anywhere. Nobody's super negative here. but you do see big gaps in between the last 3 years, 2023 to 2024, and then 2025. Those big gaps means earnings growth is happening in there or expected to. We don't know if it will because it's in the future. But let's take a look at those estimates, and you can see 2023, they made 413 last year, 2022. Expected to make 495 this year. That's about 20% earnings growth. Under normal circumstances, the street would be like, yeah, this company, it's been around a number of years, still doing 20% earnings growth. And then you look at 2024, expected another double digit earnings growth of 13.3 from 495 all the way up to 561. Now, this may or may not happen. We don't know, but they're still bullish. And if I scroll down, I'm pretty sure, okay, we can see some revisions in what the analysts are looking for, but mostly for 2023, they are higher. One is higher in the last 30 days. Nobody's cut for the full year. On 2024, they're getting a little bit more, thoughts about what might happen next year. One is down in the last 30 days. Two are down in the last 60, but one is up in the last 60 for 2024. So it's not super dramatic. Nobody's cutting in the last week at all. And we're still seeing this double digit earnings growth. So I'm liking all of that. And if we scroll down, you can kind of see what's happening. So for 2024, 90 days ago, 569 is what the analysts were looking for. And then it's now down to 561. So they're adjusting a little bit, bringing down that estimate just a little bit, but nothing like falling off of a cliff like 2021 was, and 2022 when the earnings really came down off those pandemic highs. So PayPal still seeing the decline in the shares, still trading near 52-week lows, but now look at its PE, 11.5 on PayPal, but clearly really out of favor with the street because we're not seeing the bottom yet in these shares. I'm going to bring the price and consensus chart back up for those on the video. And you can see still sliding, still, hitting 52-week lows and 5-year lows. So again, on this one, I keep asking, how low will it go? I'm with this kind of momentum to the downside. I'm not under any, quick need to jump in here. They are going to have earnings coming up shortly. I'm going to want to tune in to hear what they're saying there. It could be they get a boost off of a better than expected earnings report. Let's take a look real quick because we can on Zacks.com at what their earnings surprise track record is like. Okay, I just brought up the price and EPS surprise chart, and they have beat 6 quarters in a row, but that hasn't mattered. And they've only missed twice in the last 5 years. They have been a very good earnings all-stars on the beats, the misses and the beats. But this type of business just really out of favor. If you look at Block, formerly Square, they're in the same business. Their chart looks similar and they keep sliding as well. A couple of the other payment stocks, very weak right here as well. But this is where, when you're thinking about stocks on sale and how low can they go, you got to keep it on your watch list. Maybe you dollar cost average into this because those earnings are still looking pretty good. And that's what I want to look for as an investor. I want to look for the earnings growth. This is a Zacks number 3 right here. You can see it's a style score, a B for value, F for growth, however, but A for momentum. Well, to the downside, I guess. But that's still momentum, right? Momentum to the downside. And their industry is now in the top 29%. That's not terrible. It's the top 50% of all industries. They're in internet software on Zacks.com. And that ranks 74th out of 251 on Zacks industry rank. So all of these things aren't terrible. You might, again, just keep it on your watch list or dollar cost average into some of these. and on any on this list because, there's a lot on sale, like I mentioned. And when things get real grim, kind of like PayPal's chart is below the 2020 lows, at 5-year lows, still sinking, or what we've seen with Disney or Walgreens, still sinking with some of those, then, investors get nervous, but you have to really dig deep. Look at those fundamentals, do your research, listen in on the conference calls, look and see what is happening with earnings. Because remember, you're an owner, you're buying those earnings, and nobody knows where the bottom is. How low can these go? We didn't know a year ago in October that was going to be the low of that sell off in the overall markets. But some of these weren't listening. They continued to have some struggles here in 2023, but these are opportunities for us as investors to try to find quality businesses that actually have the earnings like PayPal does. It has positive earnings and that are growing their revenue still, but the street is just tossing them out, baby with the bathwater, being tossed out here in 2023. So there's more than just these charts. Like I said, you can screen for Zacks stocks trading near their 52-week lows on Zacks.com on the screening tool. And you can find even more than just these. These were just a couple that I pulled out that I've been tracking, but there's a lot of interesting things going on out there. It's not all just the Magnificent Seven, and some of these selling opportunities can really be a boost to a portfolio if you're able to get in at a cheap enough level. But you do have to be careful of value traps. And some stocks just happen to go nowhere for many, many years, as we've seen on this podcast and in many of my videos. And some you are just wondering, when will they turn around? Well, for these, we're just waiting to see, when they're going to actually bottom. So some of them have not yet. Let me recap the stock picks again. Okay, so we had Albemarle, that's on the lithium side. So that's more cyclical. It's selling off because lithium prices have come down, but that can create a buying opportunity too in any of these cyclical stocks. Same with energy, any of the other commodities, copper, any of these, even gold, silver, some of those as well. So keep that in mind. It's a little bit different, but it is down big, year to date now. So Albemarle, ALB is the ticker there. We talked about Zoom Video, a blast from the past, and that's down big, but not kind of treading water this year. So maybe that one has bottomed, but the ticker there, ZM for Zoom Video. Farfetch is the online luxury marketplace. It's still sinking and it has negative earnings, but the ticker there is F as in Frank, T as in Tom, C, H as in Harry. Then we talked about JD.com. That's one of the big online marketplaces and, online retailers over in China, but that stock's still seemingly sinking as well on fears of what's happening over in China with the weakness in their economy. Ticker there is JD. And then we wrapped it up with PayPal. As you can see, that one is still sinking. And so maybe it hasn't bottomed yet, but cheap now at 11 times. So PayPal, PYPL. P as in Paul, Y as in yes, P as in Paul, L as in Larry. And as always, you want to be sure to subscribe to get all of our podcasts here. You can get the Market Edge and the Value Investor on Apple Podcasts, of course. I know most of you are listening on Apple, but we're on Spotify. You can get us on SoundCloud. You can get us on Amazon Music. Just about anywhere you can get podcasts, you can find us, and you can get us on video podcasts. On the Market Edge, you can get it on our regular YouTube homepage. which is just Zacks.com/YouTube to find it, or just put in Zacks Investment Research and you'll find our whole page there. You can also get stock picks over there if you are interested in the videos there. You can get our top stock picks of the week, and the bull and the bear videos are often posted there as well. So plenty of stocks going around on our regular video page. But be sure to get us somewhere, because next week I'll be back with some more stocks here on the Market Edge and you don't want to miss it.